In its 2025 fiscal year, Meta basically showed us two completely different companies. I mean, on one hand, you've got this perfectly tuned, unstoppable profit engine. And on the other, a company that's locked in what might be the most expensive arms race in corporate history. So let's break it all down. Let's just start with the headline number, because you can't ignore it. $200 billion. For the very first time, Meta's annual revenue blew past this mark. Look, for a company this big, that's not just another number. It's a truly historic milestone. So the big question is, right? How does a company that's already this massive still manage to grow its revenue by an astounding 22% in just 1 year? Well, the answer is that this business is operating at absolute peak performance. I mean, a quick look at these numbers and you can see a business that is just firing on all cylinders. Revenue growth is actually accelerating, the cash flow is immense, and the user base, which, is already a huge chunk of the planet, is still growing. We're talking 3.58 billion people now use one of their apps every single day. Just think about that. But here's the thing. The secret to this explosive growth isn't just about cramming in more users. The real engine, the thing humming behind the scenes, is the radical, almost unbelievable efficiency of its AI-powered advertising system. Now, what's really fascinating here is how Meta did this. In the fourth quarter, they pulled off this super rare feat of both showing way more ads, that's an 18% increase, and charging 6% more for each one. This volume and price surge happening at the same time, it's a crystal clear sign of a system that is incredibly effective and just massively in demand. And listen, this isn't some kind of magic. It's pure technology. It's all being driven by this powerful suite of AI tools. You've got things like Lattice and Gem making the ad targeting insanely precise, while their Advantage Plus suite is so good at automating campaigns that it helped grow Meta's total number of advertisers by 28% in just 1 year. And this right here, this chart, it perfectly illustrates the end result. The digital ad market is just being increasingly dominated by three giants. In 2025, Meta, along with Alphabet and Amazon, controlled over 56% of all ad spending outside of China. They've solidified this powerful triopoly. So, okay, on the surface, Meta looks like a perfect, unbeatable profit machine, right? But that is only half the story. And honestly, it's the other half of the story that is way more shocking and has much, much bigger implications for all of us. And this brings us to the core tension in Meta's entire strategy. The company is generating historic, record-breaking profits. But that money isn't just going to shareholders or sitting on the balance sheet. No, it's fueling the second face of this giant. This is their projected capital expenditure for 2026. A truly mind-boggling spending plan dedicated almost entirely to one single thing, building out the world's most powerful AI infrastructure. Let's try to put that number into perspective because it's hard to grasp. The combined infrastructure spending of just 4 tech companies in 2026 is projected to hit $700 billion. That is more than the investment of 21 other major U.S. industries. We're talking automotive, energy, retail, all of them combined. This is an industrial build-out on a scale we have never seen before. And the strategy behind this insane spending is crystal clear. Sacrifice those juicy short-term profit margins now to build a computational advantage so vast, a compute moat so deep that no competitor could ever hope to catch up. So what's the ultimate goal of all this spending? I mean, what are they building? If you're thinking it's that virtual reality metaverse we all heard so much about a few years ago, well, you'd be mistaken. There's been a major pivot. The company's Reality Labs division, the home of its Metaverse streams, it just continues to burn cash at a pretty alarming rate. I mean, let's put it simply. For every single dollar it made in revenue in 2025, it lost nearly $9. Ouch. So yeah, this has triggered a huge strategic shift. The abstract, VR-focused Metaverse is out. They closed platforms like Horizon Workrooms, and in its place, a tangible piece of hardware. The Ray-Ban Meta smart glasses, whose sales literally tripled in 2025. And these glasses, they aren't just some cool new gadget. They are the physical entry point for Meta's ultimate vision. They call it a personal superintelligence. Think about it. An AI assistant that sees what you see, hears what you hear, and truly understands the context of your world to help you get things done.
So, this all builds to one enormous, high stakes gamble, bringing the two faces of Meta, that incredible profit machine, and the crazy arms race, crashing together. And this really says it all, doesn't it? The profit machine is funding the arms race. That hyper profitable ad business is being used as a war chest for the most ambitious technology build out in history. And it's all in the pursuit of this personal superintelligence. This whole situation basically sets up 2026 as a critical pressure test year. Investors, you can bet, will be watching very, very closely. Can Meta actually prove a return on this massive spending? Are people really going to buy and use these AI glasses at scale? And of course, can the company handle the inevitable regulatory battles that are definitely coming its way?
And this leaves us with the ultimate question, a question that really defines not just the future of Meta, but maybe the entire next chapter of the technology industry. Is this a moment of incredible, visionary foresight, or are we just watching the single most expensive gamble in corporate history unfold right before our very eyes?